All right. Good morning, everyone. Yes, my voice is totally broken, but doesn't stop us here at AG Capital, baby. We're still bringing it to you live. Closeout day. All right. Last night's session obviously was quite interesting because the Fed came out, released monetary policy. The obvious talk leading up to yesterday's meeting was whether or not she was going to drop patience from the statement. In fact, she did drop patience from the statement. One of the things we were looking at yesterday is out of all the economists that Bloomberg polled, only 10% did not expect her to drop patience. So it was very much priced in. I think about 20% expected her to drop patience but put in another word, and the rest were just expected her to take it out totally. Obviously that happened. Obviously the market had this whole deal priced in. For me, I think, in looking at it in hindsight and seeing this huge move that we saw in the equity space, is I think that the biggest factor here was simply that the average expectation for, they have the DOT survey that all the central bank members do their own DOT survey where they do interest rate projections over the next 3 or 4 years where they see interest rates being over that time period. And they put a dot for every quarter or every quarterly period. I think it's every quarterly period. Well, the dot estimates, they dropped significantly on the forwards. So, looking out the end of 2016, I think the average estimate from all the central bankers dropped by almost 0.5%, and going forward into, I think, 2018 dropped by almost 1%. So to me, I think that was one of the biggest pieces of this whole puzzle that really allowed the markets to rally so hard. Basically saying, well, shit, interest rates might go up, but they're not going to go up much, and that's consensus out of the entire group of Fed members. So, that I think gave markets a hell of a lot of comfort. Obviously, you saw what that did to the U.S. dollar. We saw the rand actually broke through 12 last night, which is quite spectacular. We saw some of the other crosses obviously move, significantly as well. The emerging markets obviously had the biggest rally against the dollar, but everybody rallied. I mean, the euro rallied all the way out to, we were in 109.50 at a point last night. The yen, we got down to about 119.30 on the yen. And we've seen a little bit of a dead cat bounce in the dollar this morning. I don't know if that is totally short-lived or not, but it's something that we're going to have to watch over the next couple of sessions to see if the dollar continues to weaken. All right, if we look at Asia overnight, we had follow through out of the Australian market quite significantly, almost up 2%. Billies in Rio weren't even up that much. We did have the iron ore that got pummeled again overnight, so maybe offsetting a little bit of those gains. Shanghai closed, traded to another 7-year high. Overnight in Hong Kong, we saw Tencent as we speak is up 3%, which is quite spectacular on the back of those earnings yesterday, which didn't seem that great. Maybe they're just catching a bit of a Fed boost, but that's obviously buoying our market this morning, and futures, which are flying this morning, up 636 points as we speak. But then we have Nikkei obviously off on the back of a stronger yen. Other than that, nothing really to pay attention to out of Asia. All right, a chart of interest out this morning is showing the quarterly share repurchases on the of stocks on the S&P 500 over the past 10 years, and you can see there how steep we've gone in terms of the share repurchasing. We're starting to fade off the top a little bit. Last time when we hit the top of this and we started to fade off the top, you can see where we were in the cycle. So, I think this is really a big point. I mean, this has been a big part of what's, I think, buoyed the markets over the past couple of quarters. So, it's something to take notice of. I think it's a really interesting chart. All right, let's look at corporate action. We obviously have futures closeout today, which is pretty much the only thing that you want to pay attention to. I'll just give you some brief commentary on futures closeout. I think I think that there is about 33,000 contracts open interest. Is that right? 33,000 contracts of open interest this morning, which is not a hell of a big. But what is, I think, the most interesting here is simply that the June contract is trading at about a 50-point premium to fair value of the March contract. And the reason why that's important is because it's kind of too expensive for the guys to do a lot of the rolls. So most likely what they're going to have to do is they're going to end up having to come and buy the stock, assuming that they are long of futures and short of equities. So there's a very, going from that assumption, there's a quite a decent chance that we could have a significant push from the equity side today into the closeout. All right, we look at market data out today with Japanese all industry activity numbers index overnight. Those are dead in line. We're going to see U.S. current account balance later, as well as initial jobless claims, Bloomberg Consumer Comfort, Philly Fed Business Outlook, and leading index. But like we said, today's closeout, there's not that much that you want to be paying attention to. We had the Fed overnight already, so unless there's starting to, some tectonic shifts that start to happen during the day today, pay attention to the traffic. The traffic is everything. We're absolutely flying right now at 660 points on the Aussie, and this could end up turning into like 1,000, 1,200 point day very easily if we're right about futures closeout today. All right, let's get into the maps. All right, first thing we'll have a look at this morning is the U.S. bond market. So this is the 10-year that we're looking at here. And we talked about this the other day, and we talked about kind of 2% being there's a 2% level right there, 2% being the new 3% because of where yields have gone everywhere else in the world. And last night, we absolutely imploded on the 10-year, we rallied on the 10-year, but we imploded on yields way down through the 2% level, down to about 192. It's funny, I was listening to a guy, Keith McCullough, not too long before the Fed statement, and he said if I had to guess, if she removes patience, we'll trade up to about 224 on the 10-year. And he said if she doesn't, then we'll trade down to about 190. Well, she did, and they traded down to 190, which I thought was quite funny. So I think markets obviously were positioned for this already. Unless she was very hawkish, there was just no way that yields were going to climb higher. And that's it's surprising, because we were just over up around 220 level only a week ago. So within a week and a half, we've had the entire landscape of the Treasury market change. I think it changes the outlook a little bit for the U.S. equities market, provided the dollar can stay a little bit weak. We'll just have to play it accordingly. Steinhoff yesterday, upgraded by, I think it was J.P. Morgan. No, maybe it was Morgan Stanley. It was J.P. Morgan, sorry. Upgraded by J.P. Morgan to 87 Rand per share. Part of that based around the listing on the DAX. That's supposed to happen relatively soon. You can see that we had a nice breakout yesterday. Beautiful setup here, nice flag. For me, this thing's going to all-time highs. Maybe JP Morgan's right. So this thing could definitely creep back up into the 70s here relatively quickly. All right, let's look at Naspers. Naspers, I wanted to show, just because Tencent was out with earnings yesterday, obviously in the middle of the day, we initially traded up. We actually traded to an all-time high intraday, and very quickly faded back down to close basically right on the lows of the day. But this 1720 level, which is more or less exactly where we closed, is a huge level. We managed to kind of hold on to it. There was a significant buyer there kind of at the end of the day, just kind of holding it up into the close. Tencent up 3% as we speak right now in Hong Kong. This thing's going to open significantly higher. I think there's a good chance that this thing takes out the highs, probably catches everybody on the wrong foot, and maybe makes a hard run over the next couple sessions. So watch this one closely. Sanlam, I think the rudder showed this to you guys yesterday, above 69 or maybe 79 and change. This thing could be on an all-out breakout here. Could easily happen today with closeout futures now as we speak up 770. on futures. I mean, this thing's going absolutely mad here, guys. So you got to know that everything's going to be opening up, and can really take some of these things that are pushing on new highs to some really spectacular levels. Standard Bank obviously breaking out to new highs. We've got a little bit of a inverse head and shoulder here. If you look there, left shoulder, right shoulder, head on Standard Bank. So still, I think a higher target by maybe $5 or $6. So watch this one. You can definitely tack on a little bit more today. MTN, also a little bit of an inverse head and shoulder setup. This thing also paying a divvy, big divvy over the weekend. It's going to ex-div on Monday. So here looking at MTN, there's actually quite a big target here in MTN. I think the target's up around 240-ish, 240s, something like that on the breakout here. So today, some of these shares could catch some major traction, guys. Just be careful out there. Don't try to pick tops. And then the last one we'll show is Tiger Brands. We showed this level a couple of sessions ago, how important this was and that we had just dropped out of it. Well, we finally got the capitulation yesterday. We came in and we tested that level that I told you that we would probably have to come down and test. That was around 318. We held it beautifully, reversed a little bit up off of it. So I think we reached what I think is major support in Tiger Brands. I don't know what the reason for the sell-off was, but I think significant, obviously, nonetheless. And we get another opportunity down around that level. It might be a good place to have a nibble. That's it for today, guys. Good luck out there.